I've got it recorded to my computer. So after the session, I'll download it and send a link to everyone.
Where's the snow, Floyd? 2 feet of snow. Where is it?
Oh, it's unbelievable. If you don't have a 4-wheel drive, you're not going to go to the grocery store. My subdivision will be lucky if they plow it by next week, and it's still coming down. So that's just part of living in Alaska. So I think I'm letting everybody in that wants to be in. Yeah, we're up to 27. We'll get started here real soon. I always believe in starting on time, and we'll let people in as they come. Hope everyone's doing well. Oh, there's George. Hi, George. How you doing, buddy?
Hi, Floyd. How you doing?
Doing really good. Nice to see you. Join us.
Getting snow up there?
In the last 24 hours, we see 24 inches, and it's still coming down. The problem is the city is slow on plowing. The state of Alaska plows the main roads, but the subdivisions, we'll be lucky if we have a plow in here within the next 5 days. Pretty much everybody's homebound right now. They closed all the schools, which is funny to me. When I went to school up here, they never closed at one time. I went to college in Fairbanks, and if it was 65 below, they didn't close classes. They just said, put a coat on.
That's pretty amazing. 24 inches is not even Thanksgiving.
Yeah, it is a little early this year. Okay, we're up to 31. I see it's 6 o'clock, so I'm going to go ahead and get started, and then we'll let people in as they come in. Welcome to the Anchorage IBD Meetup. This is the first time that we're starting 1 hour earlier in respect for all of our lower 48 guests. Hopefully everyone appreciates that we're doing that. So I'm going to share my screen. I have the meetings now being recorded, and I'm going to show the agenda. So let me know if you can see our agenda. You see that?
Not yet.
Not yet. Okay.
We see you.
Let's try that again. Let's go back to share screen. So you see the agenda now?
Yes.
Okay, cool. I think this is my 14th year doing this. And we do 9 meetups a year. We don't do June, July, and August because it's crazy up here in the summer, and we have more important things to do than meetups in the summer. I'm admitting it all. We're going to do a poll tonight. We've got 40 people with us so far. We welcome everyone, especially our first timers. It's always interesting to me how many people from the lower 48 and all the way to the East Coast. So rather than starting 11 o'clock East Coast time, we're trying to be nice to everybody now. It's only 10 o'clock. Everybody's lively at 10 o'clock, right? Let's see if we can go to poll number 1. And let's see. Poll number 1 says, where are you tonight? So it's a pretty easy choice of where you are, but it's always an interesting dynamic for us to see all the choices of where people are. We've got 31 so far have chosen. Give us a click and let us know where you are.
You have to add me to Pacific time because I don't have the box to vote.
You don't?
No, because I'm co-host.
Okay, we got 87% participation. Give a click on where you are, and then I'm going to share the results. So I'm going to end it in about 5 seconds here. Let's share the results. You see that? So we have 2 from Alaska, 12 from Pacific, 2 Mountain, 6 Central, 14 people on the Eastern Coast, and 1 person from Canada. Thank you for voting on that one. So I want to go back to sharing the screen. I didn't yet do the disclaimer, which I want to do. So you see the agenda now?
No.
Okay, must be operator error then. Let's try this again.
Yes.
Okay, you got it? Agenda?
Yep.
Okay, we just did the poll on where you are tonight. We're going to briefly look at today's big picture and just the first few minutes of today's market video. Then we're going to do another poll, and then our guest speaker, Monica, is going to take it away for us. But I'd like you to look at the disclaimer that all comments made and materials presented during our meetup for educational purposes only are not in any way intended to be interpreted as investment recommendations. All investments have risk. Losing money is a risk each investor must accept without blaming anybody. Personal responsibility is the key. Let's see, we've got some more people in the waiting room, so let's get those people admitted. Let's go to the big picture. We've had an incredible run. The confirmed uptrend was on my journal. I think the confirmed uptrend was November 1. That was the 17th market direction change this year. Today we had the first distribution day since November 1st. I think we were overdue for this. What happened today? So the stock market ended with sharp losses Thursday on rising treasury yields. Federal Reserve Chairman Powell. It seems every time Powell talks, the market's not very happy. Midday Thursday, stocks were sent squarely into the red after auction of Treasury bonds was weak. MarketWatch reported Powell sent stocks further lower in the afternoon. He was not confident that they were done. Stock market leaders, Celsius, Nvidia, ServiceNow are stocks to watch in the ongoing stock market uptrend. Key earning movers, ARM, Duolingo, HubSpot, Instacart, Li Auto, Lyft, and Twilio. Stock tumbled over 5%, although that stock went up 21% today. HubSpot down 6, Cart down 10, Li Auto down 4, Lyft down 6. Went up 8.7%. So I'm not going to read the whole thing, but I recommend that everyone look at the big picture every day, and especially this little box called Market Pulse. So it says we're in a confirmed uptrend, one distribution day on the NASDAQ and one on the SP. So today is the first distribution days. And then they show the leaders up in volume and the leaders down in volume. This is pretty useful information. If you read this big picture every day, you'll really get a good sense of what's happening in the market and be ahead of most investors out there. I was going to play the video, and I believe I've got to stop sharing and then share again and share sound. I'm going to just do the first few minutes because it's quite interesting. And you see the big picture again?
Yes.
Okay, I'm going to do the first 5 minutes or so. I'm going to do it at 1.25 speed just so we can get through. Are you hearing that?
Yeah.
Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ken Shreve here with a breakdown of the action in today's session, Thursday, November 9th, where we did see some selling, but after an 8-day win streak for the NASDAQ, it's the pause or pullback that we were all kind of expecting, Ken.
Yeah, both the NASDAQ and the S&P 500 up multiple days in a row. So market was starting to probably look a little overbought, but we finally got the decline. Now, it did come in higher volume, and it looks like we're going to get a distribution day for a higher volume decline for the NASDAQ and the S&P 500. We'll see what volume looks like in a little bit. But yeah, not such a great day, but I have to say, like we talked about on IBD Live this morning, still a lot of good setups out there. So let's take a look at the retail stock TJX companies. TJX is the symbol there. Also Palantir Technologies, a software company. And finally, in the home building group, Pulte Group. PHM.
Okay, we'll take a look at those three stocks. But first, let's analyze the major indexes. The NASDAQ today down 0.9%. The S&P 500 down 0.8%. The Dow off by almost 0.7%. And it was another day of selling in small cap land with the Russell 2000 down by 1.6%. We have bond yields to thank for that.
Yeah, it was really a double whammy on bond yields. Remember, it was either last week or maybe the week before. There was a 30-year bond auction not that long ago that was met with very weak demand. And then today there was another 30-year bond auction where people wanted higher yields. So that fueled the selling in the bond market and caused a big spike in interest rates. So right when we were getting comfortable with the rates coming down and the market rallying, the 10-year yield was up about 12 or 13 basis points today. Yeah, and it's testing support right at the 50-day moving average here. Yeah, the market showed today that it is still concerned about higher rates. So you had weak demand from the 30-year bond auction, and then you had a little speech from Jerome Powell, which I'm not really sure he said anything new, but he did insinuate that he wasn't really sure that the Fed has fully done its job yet when it comes to fighting inflation. So people took that to mean maybe they're still going to hike rates. And he's basically said that they're data dependent at this point. That's possible there'll be another rate hike. The market doesn't seem to think that's the case, but it was a double whammy today for the market. It was in need of a pullback. We still have indexes holding above support levels here, so it's too early to throw in the towel yet.
Okay, let's take one more look at the NASDAQ, because in terms of this pullback, if we do see the NASDAQ come in more, we'd want it to hold above the 50-day line. Is that too tall of an order here?
I mentioned on IBD Live this morning that ideally we get a little low volume pullback to the 50-day here. Volume today definitely is going to be higher. One distribution day is not going to kill a rally. If there is a test of the 50-day moving average, hopefully the NASDAQ will find support. The bond market's going to do what the bond market's going to do. If people continue to sell bonds like they did today, and that causes upward pressure on rates, so that is probably going to keep the market honest. You can see a couple of support levels below the 50-day line for the NASDAQ. Wait and see what a possible test of the 50-day line looks like. The market has been acting strong enough that it could end up being a support level here.
Okay. And now let's take a look at the S&P 500. It's right at its 50-day line.
It's very close to a test here. So I think tomorrow, Friday, tends to be a low volume day. I know it's not time for options to expire yet, so we'll see what tomorrow brings, but you can see the S&P 500 much closer to the 50-day line than the NASDAQ at this point.
Let's look at the Dow blue chips here, coming right at those converging moving averages, the 50-day and the 200-day. A couple of tight days right around 34,000 and poking back below that level. Now that we've seen leading stocks running over the past however many days, this could be constructive to see a pullback result in the formation of handles and new setups for stocks that have been running.
No question about it. I think investors should be focused on the nice technical setups and individual stocks. There are still reasons to be optimistic here that we can get a nice little year-end rally. It may or may not pan out, but underneath the surface, even though we've been complaining about weak breadth, close to 3-to-1 negative today on both exchanges, you can see the violent selling in the Russell 2000. Some market pundits are concerned about this and say it doesn't bode well for continued strength in the market. They may be right, but certainly the weakness in small caps has been a sight to behold.
A big week last week, up an outsized 7.6%, but an outsized down week this week taking shape, giving back more than half of that.
Turned away right at that downsloping 10-day moving average. So
Right.
it tends to be a resistance level during downtrends, and we're seeing that play out with the Russell.
I wouldn't want to be shorting the NASDAQ here. It seems you were going to short something maybe yesterday, seeing the Russell really start getting rejected at the 10-week could have been an opportunity. But what are your thoughts on this potentially being the early stages of the next leg higher in the early days of a bull market, or we're just going to keep getting chopped around? We've been up and down in a channel basically since July, at least for the NASDAQ. Is this just going to be a continuation of the chop?
Wouldn't be surprised to see some volatility. We definitely saw it today. That's how the market's been working lately. But listen, it's a market that is still really being dictated by interest rates. We had this bullish streak starting with the major stock indexes when that 10-year Treasury yield was precipitously falling. But again, I think when you look below the surface, there are very few broken charts out there. In fact, today's session served up so many technical breakouts, it was hard to keep track of them all. So many on earnings. But yeah, with this 10-year yield holding support here, and after that big drop last week, we'll see.
Yeah, I think I'm going to stop it. If you're an active investor, I recommend that each day you look at the big picture and look at the market action video for the day. I always go to Market Smith and see which stocks are moving. The other thing I was going to share with you, let me see if I can do that, is can you see my Thinkorswim chart?
No.
Okay, let me see. Must be operator error here. Let's try that again.
Yes.
Okay, so I need to move a window out of the way. I've manually put in for this year only the TQQ, the leveraged ETF, buy and sell points using our weekly strategy. You can see recently we had a buy point here, and you can see where the stochastics are with the fast line. Even after today's action, the fast line is well above the slow line. And if we bring in up SOXL, similar action. Let's see, SOXL. You can see SOXL not quite as strong on the stochastic, but still their fast line is ahead of the slow line. Last week on Wednesday, I saw in Thinkorswim the fast line was higher than the slow line. I picked up TQQ on Wednesday, a pretty large block this morning. Those shares were up 18% just in 1 week. I heard on CNBC that last week was the best week on the market for the entire year. And then this morning, before prices started heading lower, I think I heard them say the S&P was up the most in the last 8 or 9 days. I think they said in 20 years. So we have a little bit of a correction today. Too early to have anything to get excited about, but it is a little pink flag. Be interesting to see what action happens tomorrow. I think everyone's nervous about interest rates, and then there's all the unrest in the Mideast with Ukraine. And now, just before we get into Monica's presentation, is we're gonna do one more poll, and let's go back and say, we'll launch this poll. And the question is, are you familiar with Charles Harris trading history? It's a yes or a no. So we're just trying to gauge, it's trying to help Monica as she's getting ready for her presentation here to get a sense of how many of you are familiar with Charles. He did a major presentation in late 2019 and did a second presentation about 2 months ago. We've got 74% participation. It's just a simple yes or no if you don't mind clicking one of the buttons. Okay, I'm going to end the poll. We've got 80% participation, so sharing the results. So it's almost 50-50. We have a 47% are familiar with Charles's trading history and 53%. Oh, so hopefully that's useful information to you, Monica.
Yes, because then I need to talk about his actual trading history.
Okay, I think you can share, Monica, and you can launch into your presentation. I'm really looking forward to this presentation, and thank you for agreeing to talk to us tonight.
Yes, I'm very honored to be here. I've come to your presentations many times, a big fan of the TQQ strategy, and I'm honored that you would choose me to present in this very esteemed venue. I'm sure that you can see the screen because it's showing that you can. Is that correct?
Yes.
Okay. So today I'm going to be talking about my insights into Charles Harris's boom and bust trading style. And I'm going to do an evaluation using psychodynamic and behavioral perspectives. I recently talked at the New Jersey meetup. I didn't go too much into the addiction model, but I'm going to address that today as well. So I have a background in psychology, and normally when I give presentations, I don't really talk about it because I know mostly you want to know what I can tell you about trading stocks that will help you directly increase your profit. But today I'll talk about my background. First, I got my bachelor's in psychology at University of Nevada, Las Vegas, then my master's in clinical psychology, University of Nevada, Las Vegas. Then I went all the way to the Southeast and got my PhD in behavior therapy at Georgia State University. Got another PhD in psychotherapy at Georgia State University. I also picked up a teaching credential when I came back to California. Then I got an MBA in sales marketing from DeVry University, a certificate in digital marketing from the University of California, Irvine. I am published in the Journal of Behavior Therapy and Experimental Psychiatry, and I've been a trader since 2007. First of all, I want to talk about the difference between psychotherapy and behavior therapy. Now, in psychotherapy, we attempt to uncover the root causes of behavior by exploring a person's childhood. The theory is that once the patient gains insight into the causes of behavior, then with the help of the therapist, healthier behaviors can be learned. Psychotherapy believes that feelings cause behavior, and often metaphorical communication is used to address both the conscious and the subconscious. Now, what is metaphorical communication? A therapist used the Greek myth Icarus to help explain to Charles what he's doing in trading. That's an example of metaphorical communication. His therapist asks him questions about his childhood because she believes that the feelings he had as a child are still present today and are affecting his current trades. Now, behavior therapy is different. It observes the antecedents or stimuli before the behavior and the consequences that reinforce it. By manipulating the consequences, new behaviors can be learned. Behaviors do not believe that feelings cause behavior, but are collateral byproducts reinforced by the same contingencies as observable behavior. What that means is you have these antecedents, or what happens before the behavior. The person reacts, and then the consequences, whether it's positive consequence or maybe a punishing one. A negative reinforcer can also increase behaviors. Different things can increase the probability of behavior. The feelings don't cause it, but they are under the exact same contingencies. So the stimuli that are eliciting certain feelings and that are also being consequated by the same consequences. There's two different theories, and this is important because when we're talking about the contingencies of Charles Harris's trading behavior, we're going to examine if they're the same ones that were in effect as a child or not.
You have an arrow on your keyboard.
Yeah, I'm pushing the right arrow and it's not going.
How about space forward?
Charles Harris, the therapist, uses metaphorical communication to affect change in Charles's trading. She explores the primal wounds that Charles has experienced in his childhood with the expectation that once he gains insight as to why he trades the way he does, he no longer will be compelled to trade so recklessly. She uses the Greek myth of Icarus to affect change in Charles. Why use mythology? All the human vulnerabilities, failings, and foibles that are known to man have been described in Greek mythology. It's easier to look at the characters in Greek mythology, see their mistakes, than look at our own behavior. It doesn't feel so bad. Relating to a mythological story, the therapist is communicating both at the conscious and subconscious level. When the therapist is working with a client, they don't directly tell them like you shouldn't take these risks anymore in trading. Rather, they find a different way to approach the patient that is more acceptable. And one way is with the Greek myth. So the myth that Charles's therapist used is the story of Icarus. Daedalus was a famous architect, inventor, and craftsman. He killed his sister's son because he feared that the boy had more talent than he did. He fled to Crete, where he had a son named Icarus. Minos was the king of Crete, and he wanted Daedalus to build a prison from which no one could escape to cage the Minotaur, part human, part bull. And after he built the prison, Daedalus wanted to leave the island, but King Minos refused to let him go. Daedalus devised a plan to escape, and he would build 2 sets of wings from feathers and hold them in place on a wooden frame. He devised a plan for himself and his son to escape during the night. For those of you who have never heard of Charles Harris or don't really know much about how he trades, he takes a lot of risk. Sometimes that works in his favor when there is a bull market, but then he keeps trying to make money when the market has turned and becomes a bear market, and he goes on margin and uses other ways of increasing his risks, which I'll go over.
Okay, Monica. In case people don't know, Charles is associated with Investors Business Daily, and he's spoken at Investors Business Daily event, Level 5 seminar in late 2019, and then he spoke at Investors Business Daily Meetup group a couple of months ago. So we're talking about Charles because he's a very visible person. Occasionally he's on IBD Live also. Sorry for interrupting, Monica.
I'm really glad you did. I encourage you to do that. That was very helpful because I've watched so many of the IBD Live episodes and I've seen him so often. I just assume that people see him. He's also on YouTube and he's done Trader's Journey 1 and Trader's Journey 2, which is a recording of the San Francisco meetup where he gave the talk that I listened to, and recently it went on YouTube. And he's also a portfolio manager for clients. And so he doesn't trade recklessly when he's trading clients' money. He only trades recklessly when he trades his own money. So before they took off, Daedalus gave his son a warning. Do not fly too low. The sea spray might dampen your wings. Do not fly too high. the heat of the sun might melt the wax that holds the feathers in place. And they were flying, and Icarus was full of wonder. This was the world as the birds saw it, a sweeping view of land and sea and sky. And later on in my presentation, when Charles has been making a lot of money, he mentioned the day he took 50 screenshots of his account to share with others. And I'm thinking this is how he felt. He was flying and everything was wonderful and he was full of wonder. Icarus forgot father's. I cannot read my own screen because it's blocked by you are screen sharing. But anyway, he went higher and higher toward the hot, bright sun, called out to Icarus. He tried to remind him of the danger, but Icarus was too far to hear, and he didn't notice when the wax began to drip. As the wax melted, the smaller feathers of his wings fell and fluttered away. Icarus knew he was in trouble now. He beat his arms harder to stay aloft, but all his beating would not help. Icarus began to fall, tumbling down. His father watched it all happen, but he could do nothing to stop it. Icarus dropped like a rock. He plunged into the sea. Daedalus flew down as low as he dared to. He circled the spot where Icarus fell. He searched for any sign of his son and cried out his name. Then he saw feathers float up to the surface of the water. Daedalus wept at his son's fate, and after several days, Icarus washed up on a nearby island. Daedalus dug a grave and buried his son, and he named the place Icaria. So when you compare Icarus to Charles, Charles does not listen to his father, William O'Neill, who's not his real father, of course, but he's a father figure. He doesn't cut losses when the trade goes against him. He flies too low. He tries to top tick a stock instead of taking profit when he has them. He flies too high. The therapist says the cause of Charles's reckless trading, and this is what Charles agrees with, is that he grew up in a family with parents where, despite his best intentions, the level of attunement he needed versus the level of attunement he received was lacking. And he suffered attachment trauma. And Charles went on to say that this was life-threatening for him. Those were his actual words. Now, what is attunement? Attunement is the level of attention that parents pay to their children if they're noticing what their children are doing and praising them and giving them feedback and just being totally in tune with their child. He didn't have much of that. To compensate, Charles became the perfect kid. He was well behaved, polite, straight A's, high achiever, best student, and teacher's pet. As an adult, Charles believes that he can receive the unconditional love and validation that he missed in childhood in the form of a transaction. He believes that he has to do something to be something. From this viewpoint, one can say that Charles believes that the same contingencies that were present as a child are still present now, and that he trades recklessly because he wants to make even more money than he has already made. By doing so, he takes risks that are not wise at all. Charles sabotaged his success because he did not believe that he deserved it or felt worthy. Charles became reckless, took on too much risk, made poor decisions, dug in his heels, and became set that he was right. He believes that he is hardwired to perform in order to feel loved, valued, and secure. He has to be the fastest, the smartest, the richest, the coolest, the best trader, and have the nicest house. It's not enough to do a post analysis to figure out what you're doing wrong or what rules you're breaking. What is much more difficult and paramount, according to Charles, is to figure out why you are breaking them. This word why will come up frequently in this presentation because Charles believed that you can do a post-trade analysis, but that won't help you if you don't find out why you broke the rules. Charles compares himself to Jesse Livermore, and the book that he took this out of is Reminiscences of a Stock Trader. Jesse Livermore says, a stock speculator sometimes makes mistakes and knows that he is making them. And after he makes them, he will ask himself why he made them. And after thinking of it cold-bloodedly a long time after the pain of punishment is over, he may learn how he came to make them and when and at what particular point of his trade, but not why. And then he simply calls himself names and lets it go at that. Liver knew everything that he needed to know about trading. He was brilliant. He made fortunes over his career. He was a natural, yet he blew up his account again and again because he never figured out the why. Livermore took his own life, and so he died a very premature, unfortunate death. And we know that Icarus also died prematurely by taking on too many risks and going too close to the sun. This is the comparison that Charles has made for himself, that he also takes way too many risks. The therapist had a treatment plan for Charles. She stated, "It is incredibly sad for the child you once were to have felt that way. It is less sad now because we can name it, do something about it, and parent our inner child." She helped Charles become more aware of his feelings and develop a skill set for dealing with them. His therapist advised, in order to touch extraordinary, you have to be genuinely ordinary. You have to show your flawed and ordinary self in order to feel the power that happens between people when you are accepted in the ordinary. This is the reason Charles reveals his flaws publicly. This is called paradoxical intent. When he was at San Francisco, remember where he says, and now we're going to have a therapy session. He goes into great detail about his flaws. He talks about his childhood, how he learned the wrong way to deal with situations, and how he feels he has to be the best and make even more money. And he showed how wrong he was in doing that. And this is the way he shows his flawed self until he can accept his flaws. Then he will no longer need to trade recklessly. That's the thinking behind that. Why is it that for most people, it is difficult to follow clear, uncomplicated, time-tested rules of trading? Charles stated that you could make a fortune if you simply trade in line with the market, don't fight the trend, cut your losses quickly, and let your winners run. Charles says that we need to find out why we break the rules. Write down our rules and look where we broke them. We have to look deeper and figure out what is motivating us to keep breaking the rules. In 2020, Charles had the biggest year ever. His account ended the year up nearly 1,400%, beating his internet bubble gain in 1999 of just over 1,000%. His hit rate was 72%. His average holding period was 9 trading days. Throughout the year, he heavily deployed margin and added funds to his account. He went to all cash on the last day of 2020 and locked in an 8-figure gain. Unfortunately, he had to pay the taxman half of his profit. This experience shaped his future trading behavior. Albert Einstein claimed compound interest was the 8th wonder of the world. Compounding depends on both investment return and time invested. Large drawdowns are the enemy of compounding. It takes too long to recover from a devastating drawdown, so that element of time is wasted. He saw that having to pay taxes was the enemy of his attempts to compound his account. It is hard to build wealth when you're splitting the profits with Uncle Sam at the end of each year. But he came to terms with that because he believed that the ability to use margin would provide the opportunity to rebuild faster. In 2021, the change in trading style incorporated the use of margin. He would focus on long-term capital gains in Tesla, which is his highest conviction stock, which he planned to hold for a long secular move while swing trading other stocks. There were two reasons for this change. One was the tax situation. He didn't want to share profits with the government at the 50% rate. All that active trading in 2020 didn't amount to much outperformance over simply holding the stock. Timing the stock was too difficult. So he turned into a buy and hold person at this point. This is a summary of 3 years of trading from 2019 to 2021. His margin account was up a compounded 13,904% over 2 years. And that is a 144-fold move. His Roth account was up a cumulative 1,200% over 3 years, equivalent to a 13-fold gain. He was in very good shape, had never been richer, was confident and optimistic. By 2022, he did not believe that he was at the end of his run. He thought he was on a clear path to a net worth of 9 figures in 2 to 3 years. On the first day of 2022, Tesla gapped up 13%, and he took 50 screenshots of his account. He had 115,000 shares across account in the Tesla position. When the stock went down and he got a margin call, he added funds to his account instead of getting off margin. Later, Tesla fell 75%, and Charles was forced to sell on the way down to meet the margin calls. When he no longer had funds to add to his account, his broker gave him the option of hedging his position by buying out of the money short-term put option. The stock kept falling, and he bought a new lot of put options in order to hedge his position. He was paying margin interest in the 6 figures, spending tens of thousands of dollars on short-term put options that perpetually closed out of the money and were worthless because the stock went up that week. The taxman had really contorted his thinking. The bear market, the end of 2021 and he had a hard time believing it was happening. He really didn't believe that he was in a bear market. He had relied heavily on secondary market indicators that flashed oversold levels and the excessive levels of bearishness all the way down. He was thinking about the stock Apple as a precedent for Tesla, as the similarities between the two companies was striking. At the low, the stock had fallen 75% off its peak, but he had no contingency plan. He was holding for long-term capital gains. And he remembered Bill O'Neill said, if your stock is going down and you don't sell it, you may not have any taxes to pay at all. It's not enough to know the rules that you're breaking, but rather why you are breaking them. The trading rules that I wrote down 27 years ago in December 1996, after I had lost half my money right out of the starting gate with absolutely no clue as to what I was doing, those rules still hold up today. I find it interesting and honestly a little sad that when I review my trading journal entries, I realize that after each drawdown, it was always the exact same rules that I was breaking. The entries that I write down after every blow up are the same entries as before. Nothing ever changes. In 1996, I lost half my money, which came to $3,000. And that was a lot of money to him then. But with his latest blow up, he lost tens of millions of dollars. As a result, he learned that if you're going to hold a high conviction stock that you believe to be a true market leader over a long period of time, it is best not to do it on margin. The good news is that he had wired some money out of the account to pay taxes and college tuition. And what he took out, he kept. And what he left in, he lost. He never believed that he was going to lose. He turned an 8-figure account into a 6-figure account. And those 2 zeros represented a lot of money and precious time wasted. Charles, takeaway on stock trading. You have to realize that you can be wrong and misjudge how bad things can get. You can't be aggressive when you're going for long-term capital gain. And he learned, and this is key, he was all boom or all bust, all in or all out. He believed that he was all right or all wrong. However, later, he realized that trading is more nuanced. If something starts to violate rules, you back away. It doesn't mean that you dump the entire thing. He does not trade recklessly with clients' money. That's very key. Right now, he's holding 2 stocks and 6 in clients' accounts. When he loses money, he won't allow himself to spend money on a drink like iced tea at lunch. He believes he has to save the money. He believes that if he could tame his inner demons, he would still win big on the upside, but lose less on the downside. He believes he needs to take some money out of the market when the window of opportunity is closed. The problem is he doesn't know when the end of a run is. Here's what hasn't worked for Charles. He thought if he puts pictures of himself at 5 years and 7 years, it would remind him not to make decisions that don't serve him in the end. But that didn't work. He also put a program on that flashes messages across the screen. Get off margin, raise cash. You're now down 12% off your high. But he ignores them because he always thinks that he is right. And this shows you that when you are in charge of your own feedback or reinforcers or anything like that, there's less likelihood that that'll work. Because if you can control your reward, then you will ignore feedback that you should be paying attention to. Here's what I think is going on with Charles. The contingencies of behavior that were in effect in his childhood are not in effect now. I believe he's on an intermittent schedule of reinforcement. Sometimes he does make money taking big risks, and that maintains his reckless behavior. What is the intermittent schedule of reinforcement, you might ask? That's when sometimes a behavior is reinforced and other times it isn't. And the intermittent schedule of reinforcement is the most powerful schedule of reinforcement as opposed to a fixed schedule of reinforcement. One example of that is gambling in Vegas. I don't know if any of you have ever played the slot machine. I have. And it feels good when even 3 nickels or 3 quarters come down. And then a little later, I might have 10 quarters that come down in the slot machine. I might say, you know what? I'm pretty good at this. I'm at slot machine playing. I'm going to keep going. But then you find yourself feeding the machine with your quarters or nickels, and you lose you had brought along with you to gamble. The problem is that the therapist is also not a trader and is primarily interested in his trauma. I am sure that if we were to observe a therapy session, she would be leaning in when he talks about his childhood because she studied traumas in graduate school and she understands them. But when he's talking about trading, not so much. She's leaning back and goes, I don't understand what he's doing. I hope he does. A psychologist should observe the trading behaviors in order to change them and not take a leap of faith that resolving traumas will change the trading behavior. Behavior change must take place in vivo. That means in the situation, not in the therapist's office. He needs to be accountable for his personal trades like he is with his client's trade. If he had to report to somebody each day on how he traded, that might prevent him from trading recklessly. When he trades clients' money, he has to cut his losses and he trade a certain way. I'm also wondering if he's in a codependent relationship with his therapist. Both the therapist and Charles are incentivized for him to continue to trade recklessly. Codependence goes hand in hand with addiction. As long as Charles continues to have issues with reckless trading, he has a reason to continue in therapy, and the therapist retains a good client. There are a lot of clients that therapists have that are troublesome. They might be violent, they might be disrespectful, a lot of different things. Charles pays his bills and he's a good client. When you listen to Charles talk about his therapist, he appears energized and smiles contentedly. He doesn't have the same kind of energy when he's talking about his girlfriends or his ex-wife or his parents, but he becomes animated when talking about his therapist. He glows and he says, "You really need to go into therapy and dig deep and find out why you're trading the way you do." So, what Charles needs to do is develop a system of accountability for his personal trade because it is the accountability in place for his clients that prevents him from recklessness. We should look into Charles' trading, whether it's actually gambling. Gambling behavior is strengthened by intermittent schedules of reinforcement. Winning money, is it possible for him to trade in moderation or not? Remember that he's always around trading and traders. This is his whole world, and it's hard to walk away from something that you're addicted to. Think of alcohol. Very hard to, if you are an alcoholic, to drink in moderation. Charles has issues with perfectionism. He has to be right on a trade, which is more important than making money. He wants to top tick a trade and get out at the top of his portfolio value. So let's talk about measuring therapy effectiveness. There's all sorts of tests you can run to see if something is effective. We can talk about face validity. That is said to be taking place when the treatment appears useful to the client. Examples: resolving childhood trauma and developing insight. It could prevent reckless trading. Once he realizes why he needs to trade so recklessly, he could stop. Or you could talk about repeated patterns of trading behavior if he could develop some insight showing him how often he tries to top tick his trades and that he lets his losses get out of hand. If you discuss this in therapy, you could say that would work and he wouldn't do that anymore. That's called face validity. But we don't know if it actually does work. It looks like it could work. It's about trading. It's about trauma. We're developing insights. Maybe it works, but we don't know. Criterion validity is measured by examining objective changes. It could be in behavior. For example, does he follow after therapy? Does he follow identified sell rules? Does he hold winners? Are his profits greater? We have to keep market conditions equal to keep the comparison fair. As Charles does really well in bull markets, bear markets, not so much. And he doesn't see them coming. So if you were to measure the effectiveness of therapy, you'd have to show that it works in both bull and bear markets. You could also do single subject studies across situations where you could see if Charles does improve his trading behaviors after therapy. If you could count the times that he was trading properly or improperly before therapy and then count them after therapy, and if there's a robust effect of more appropriate trading behavior, then you could infer that trading worked. But you'd have to also see how it would work in different methods. And another way is to see how this kind of therapy works across subjects, to see if other boom and busters would benefit from therapy and show that therapy works across subjects. It'd be hard to do this with a large experimental group of 30 people and look for statistical significance. That would not be the best method because therapy is so subjective, and it's better to do single subject designs, in my opinion. Just look whether there is a difference after the implementation of therapy. So what would William O'Neill say? In this book, the second edition of How to Make Money in Stocks, this is what William O'Neill says. And this is from chapter 18, I believe. Point 11, the majority of unskilled investors stubbornly hold onto their losses when the losses are small and reasonable. They could get out cheaply, but being emotionally involved and human, they keep waiting and hoping until their loss gets much bigger and costs them dearly. Individual investors worry too much about taxes and commissions. Your key objective should be first to make a net profit. And number 17, most investors cannot look at stocks objectively. They're always hoping and having favorites, and they rely on their hopes and personal opinions rather than paying attention to the opinions of the marketplace. Post-trade analysis, the why versus chart analysis, which has greater efficacy. Here's a chart marked up by William O'Neill where he shows what he did in his trades and the feedback that he has for himself on whether he made the right moves or not. Which one has greater efficacy? That's something that we can discuss, but I do think that we need to look at the addiction model in addition to the contingencies which we examine in behavior therapy and the feelings that we examine in psychotherapy. That's the end of my presentation, and I urge you to trade responsibly and grow your profits.
Thank you, Monica. I suspect that we have some questions out there, and Monica's graciously agreed to take questions.
Would you like me to pull my face, or would you like me to exit the slide deck? So what are you seeing?
Let's see your face.
All right. I'll take questions now. Go ahead and unmute yourselves, people. Be bold.
This is George in LA. He had over 1,400% return. I believe he said the average time he held the stock was 9 trading days, and he had a couple hundred trades. So to get that kind of return, is he getting all these trades 20% and getting that trade and moving on? That's a huge return.
From what I understand, he did a combination of swing trading. He held 9 days most of the time. Sometimes that varied. It was like an average of 9 days. And he held Tesla. And for a while that worked when Tesla had its big move. Did that answer your question?
Yes, I'm just trying to figure out the math of how he got such an amazing return. I guess it adds up if you have several hundred trades and they're all 20%.
And heavy margin too.
Was he using options? No.
He did some of his trades were options, but most of the gains were, if he had $100,000, he'd put $200,000 in the market. And if the market was going up, the returns were stellar.
And he was only in 4 or 5 trades at a time?
So he, as I mentioned in the presentation, that currently he's holding 2 stocks. And I see a note from Steve that he was on full margin. He trades sometimes, which I think is very risky, to just be in 2 stocks. For his clients, he's holding 6 stocks. That was in September at the San Francisco meetup. I don't know how many stocks he has today, but just my personal opinion, holding 2 stocks. Imagine an eight-figure portfolio, and you have it divided between two stocks. Can you read it? Because it went away when I clicked on it. Can you read it, Floyd? Steve, go ahead. Oh, there he is. Okay, he was margin mostly in Tesla and buying call options in Tesla. He could use the buying power he generated from the Tesla gains to buy even more Tesla.
I remember maybe a year ago, Charles was on IBD Live and he made a comment like, I will never sell Tesla. It blew me away when he said that because I heard his presentation in 2019. That was pretty heart-rending. His presentation, he talked about his wife left him and all the challenges he had and et cetera. And then he spoke again a few months ago and it was like, I was thinking in my mind, wow, he did it all over again. The second time, he loaded up so heavy on Tesla. Was that like $40 million of Tesla stock he had? Dollars in Tesla. When Tesla started rolling over, he couldn't, for whatever reason, I need to say something here. We're not being personally critical of almost every single one of us has our own little quirks and our own little trading deals. And Monica going to the presentation a couple of times, I go, wow, I think she's talking about me. We're not picking on Charles. What we're trying to do here is see what there is to learn. But when Charles loaded up on Tesla, I think because of where he lived, he saw Teslas everywhere. And there were all these neighbors of his and people going, what a wonderful car it is. In his mind, Tesla was going to go to $10,000 a share. He even mentioned one time he put a spreadsheet together and he flashed it up on the screen in one of the presentations I saw. He said, if you make a spreadsheet like this to show how you're going to make $1 billion, that's the beginning of the end for you. In the presentation in 2019, he showed a picture of his license plate, and I forget what it said right now. Was that
Market Wizard.
Market Wizard? And I think he said one of his friends leaned over to him and said, Charles, this is the beginning of the end. Like a pride kind of thing. He wanted to have the license plate and this spreadsheet. And like Monica said, I've never been in the environment where you're a room full of traders and all these type A alpha traders. And maybe you're motivated to say, I want to be the best. I'm willing to take extra risk to be the best. Where all of a sudden you see your account getting slaughtered and you're back to the therapist saying, woe is me. I've seen myself repeat things. And I really related when Monica said Charles wrote down in his journal maybe what his trading problem was. And he said when he went back and looked years ago, it was the same exact thing. And so there's something for us to be aware of. We're all capable of making a lot of money. We're all capable of losing a lot of money. We just need, either with outside help or self-reflection, how can we realize where we could do better? I shouldn't say any more. This is Monica's specialty. I'm an engineer.
You're doing a great job. I'd like to add something, though, that I've been thinking about lately. Have you ever noticed that if you have something personal that you're trying to share with somebody and you start talking about your childhood, the other person usually loses patience after. Imagine him talking about his childhood with his fellow people in his trading world. They're going, and what can we get back to talking about stocks, Charles? I can just hear it because I know that when I just started sharing anything personal with another trader, I can tell that the attention span is so short. So I think that he really has a need. His childhood is flashing back in his mind continuously. If you remember from the San Francisco meetup, towards the end of his presentation, he started delving into his mind, his childhood, and his problems. Some people would call it being self-absorbed. We were all interested because we were looking at it from the lens of how is this affecting his trading? And how can a man that is so talented at making 1,400%, how can he have these foibles that are doing him in? And so we looked at it from that perspective. But I think that in many ways, the therapist is continuing this behavior of Charles by continuing to listen to him about his childhood and saying, if you have to keep talking this way and you have to tell people in meetups about these issues. You have to keep doing it. And until you've gone through to the end where you have fully worked through your problems, you're not going to do better in trading. I think that's what the therapist strategy is. I know I've been in therapy, and that's what my therapist strategy was. You have to work through these problems, else you're not going to get to the other side. And I'm not sure, there's one part where he needs to talk about his childhood to the therapist. That's valid. But if he's doing that because he thinks that's going to change his trading, I think that's a whole other story.
I think that when he only had 2 stocks in September, that was a smart move. The market was under pressure and then it went into correction. And there were fewer stocks out there that you would want to put your money into. So I think he did the right thing. If he was on margin, obviously it would have been the wrong thing to do with those 2 stocks. But just holding the 2 stocks by itself was not a bad move.
To explain why he had at the same time 6 stocks for his client.
Probably because they're long-term investors and he was leaving them in the market because they were investing not for days that he's in the market. They're investing for years at a time. And so that's why they would have held 6 stocks where he was only holding 2.
That's a good point. I was looking at it that he was trying to concentrate. If you're in 2 stocks and one of those stocks goes down, if you have more stocks, you're in a sense hedging. Some people say having 30 stocks is way too many and you can't make profits. But if you have 8 to 10 stocks, I think that you have less chance of making a big mistake and losing a lot in one stock.
During the month of September, we had more lows than highs. There would have been fewer places for him to be putting his money.
That's a very good point. I really appreciate it.
So someone asked me to do another poll. I'm going to bring up a poll based on a request by one of our members. Can you see the poll where it says, do you set a stop loss for all trades? Can you see that?
Yes.
So you yes or no, and if yes, are you setting a 5%, 10%, or 15%? So right now, we only have 3 people that have participated. So if you wouldn't mind just clicking on yes or no, and if the answer is yes, then what percent is your stop loss? I'm going to give about 15 more seconds here, and then we're going to cut it off. So if you want to participate, please click on those here rather quickly.
I tried clicking on no and then yes, and it would not accept it. So I haven't been able to finish the poll.
I'm going to end the poll. We've got about 40% participation here. I'm just going to show the results. Can you see the results?
Yes.
So the majority of the people say no, and ones that said yes, it's split between 5, 10, or 15%. Hopefully this gives a little bit of a flavor. I saw a funny comment by Steve. He said if Steve would move to Mississippi, he'd only see about 1 Tesla a month and wouldn't think that's such a hot thing. Any other questions that people may have out there?
I found it interesting that when Tesla went down, his broker reached out to him and recommended he buy out of money puts.
Right.
He's a professional trader. He's read all the blogs. He's walked and talked with the great Mr. O'Neill. What's the psychology behind that? Where you're not supposed to go into a second trade, and then you continue with the second trade from somebody that isn't as experienced as you are. What do you think happens with the trader when he falls into that?
He was committed to holding his stock. By doing these put options, he could maintain his primary goal of holding Tesla. And he was just so committed to that. And this shows a lot of rigidity in thinking. He's not flexible. His belief is that Tesla is going to be incredible game changer going forward. It has been already a game changer, but going forward, even greater game changer with the special, as Tesla's also in solar, and they have all sorts of ways of storing the energy there. And they have robo taxis and all sorts of ideas for the future. And he's so into that ideology and he's very rigid about it. He's not giving it up.
Also, Monica, when you get a margin call and you're talking big dollars, there's got to be a certain amount of stress. I've read in books and heard people say, never answer a margin call, liquidate the position, admit you got a problem and get out. The alternative is try to save the position. I'm not 100% sure what to do. The broker suggested, let's do some call options or put options, whichever one it was. And it was the absolute wrong thing to do. I believe he got himself in a position where he wasn't thinking clear. And rather than doing a timeout or just closing the position out, forgive me if I'm saying this too strongly, but it felt to me when I heard him say that, it felt like an act of desperation and face saving, because if it worked out, he was still the hot stud guy with big account. And it turns out that those options expire worthless and it was a waste of money.
If the broker's incentivized too.
So I think the lesson is to look at a stock and be objective. And that's the most difficult part. I had something similar happen to me with NEO. And my analysis was when it was in the 40s that it was going to be the front of the side of Tesla. And as NEO was in the 40s and now it's a $7 stock. But I can relate to it. I don't have his money, or I'm not a professional trader, but I was committed to NEO and I ended up getting out of it in the high 20s. When I knew better, I had everything written down. I just didn't move forward because I was not wanting to get wrong. Great presentation. It reminded me of my NEO trade.
Yeah.
Thank you. And I think Floyd is right that we have all given back some of our profits and we really didn't need. I know I have.
Right.
We remembered the heady times of 2020 during the bull market. We felt that it would continue going. And then for many of us, we didn't realize that in November of 2021, that was the end. We just kept going and we didn't want it to stop.
And isn't it Warren Buffett that said something like, high tide lifts all boats, but when the tide goes out, you see who doesn't have their swimming trunks on?
You said it, but it's funny.
Sometimes we think we're really smart and we're just riding on the coattails of the market. We're not as smart as we think we are. And so you get this euphoria phase. Sometimes you go from euphoria to panic, and so the emotions kick in. That's why I love the Bill O'Neill system. I don't follow it as well as I should, but the Bill O'Neill system is you have a few simple rules, and if you follow the rules correctly, you can make a fortune. From my own personal experiences, I'll give you my own self-confession. Every time I thought I was a little bit smarter than Bill O'Neill, it was proven time and again that I'm not. What I like to say too is if you have a hard and fast rule, let's say you have a hard and fast rule that I will never let a stock go down more than 7% or whatever your number is. You write that down and say, I'm going to follow this religiously. The first time you let a stock go down 10 or 11% and you haven't sold it, then you really don't have a rule.
It's true.
He's doing exactly what Livermore did every time he went bankrupt because he didn't follow his rules and thought this time is different and held on to his losses. I think Charles is the same. He has a big ego. He's been very successful, and you can either make money or be right, and he wants to be right. The one thing that differentiates him from O'Neill is robotic in his trading. Every large loss was once a small loss, but Charles has let it go beyond the small loss, and it just keeps snowballing. You should only date stocks, never marry them.
Very good point there, George. I think the main thing is this is not in any means to belittle or beat up Charles. The main purpose for Monica sharing this with us is what is there, this whole Icarus thing, and the dad saying not to fly too close to the sun. What can we take away from Monica's presentation? Is there one thing that will help us be more successful? That's what I want to take away from this, is that Charles, through therapy, has been willing to bare his soul and share things with us. That's one form of entertainment, but if you only view it as entertainment, you haven't learned anything. By the grace of God, I haven't blown up my account again. And what do I learn from that? So that if you have a successful account, you can help your family, you can help your community, you can give back to others or whatever, and be a contributing member of society. We all should look for our opportunities where through our success, we can help make this a better world.
I think that's a real good point. One point that I know that I got from it, and I would like to have some people unmute themselves, but I got that he said he was black or white and that he would get completely out of a trade when it was working against him. And I tend to do that as well. That trading is more nuanced, that you don't have to get out completely and that you can leave some in. I think that's a valuable lesson. Somebody unmute themselves and tell me what you got out of it.
It's definitely a new way of looking at things. Interesting presentation and very good. Thank you. Enjoyed it. One question I have is, did you have Charles' permission to mention him?
He's on YouTube. It's public. The entire presentation is out there for discussion.
Thank you.
There's a lot of YouTube. There's like Trader Tales. Ali Coram has interviewed him. There's the Trader's Journey 1 that you can watch. And he's on IBD Live frequently. And he's just a great guest on IBD Live. And actually, the story of Icarus came from IBD Live. So that's where I got it.
So does anybody know, like, this has been public, so we all know the downfall, what happened. How has he rectified this? What steps did he take to ensure that going forward, he makes great trades, but then when things go bad, what was his learning lesson here?
That
Implemented it.
That is a very good question. Remember, as a child, he wanted to be the perfect child, the teacher's pet, and he strove for that. Now he wants to be the best trader and have the best returns. And he mentioned also that there's so much power in vulnerability. So from Charles's point of view, if you were to stretch that, you know how people say you can never really top tick a stock? If he can accept that he cannot top tick a stock, that he is imperfect in that way, he would be a more effective trader and hold on to his gains.
But we understand that because, like, if we are looking at in retrospective way that this is what he should do. What I'm trying to understand is now that he realized, because he keeps talking about his failure so that other people can learn, what is his own learning? Like, how is he implementing it in his own life so that going forward, let's say 2024 comes in, he makes another 1400%, he gets attached to another XYZ stock, which is the Tesla of 2024, and then 2025 comes when everything comes crashing down. What is his learning lesson? I'm just trying to understand, like, has he talked about that? Anyone knows about it?
I'd like to open up the discussion rather than for me to tell you what I think. You've already heard so much of my opinion all evening. And I would like to hear other people's opinion because I think that would be helpful. Does anybody think that any of the therapy is actually helping him in trades alone? Does anybody get that feeling?
So Steve, why don't you unmute yourself? Joe,
He's got great comments here, wanting everybody to hear them.
I was wanting y'all to like my jokes.
We're in the next.
so what do you think about the question of, as Charles learned a lesson here or not, Steve? What do you
I don't think he has yet. I think he will, though. I'm the optimist, but I don't think he's learned anything yet. You can see that in when he was doing his Trader's Journey 2. He talked about where now his portfolio had gotten back down to the six figures. So that was when he was giving that presentation in San Francisco. I think he'll make it back. His issue, this is just a side thing, but if y'all watch Trader's Journey 1, he talked about how with Tesla, and he's talked about this before in his other master's workshops when he's talking about psychology, that he would talk about, yeah, that Tesla, I must have written 10 pages of reasons why I think Tesla is his great stock. He told everybody in the audience, he says, when you get into a situation where you're just trying to come up with every possible reason to hold this stock, that's a bad thing. That's a bad path to go down because you're just trying to rationalize your decision and you're grabbing all kinds of reasons why you think you've got a good stock instead of just hey, just sell it. It's just not working. At the San Francisco meetup, we're on the side and he's talking about Tesla. And it almost seems like deja vu because he was giving us a litany of reasons why Tesla will come back. I said, that's the same thing that you were saying at all these masters workshops. It's okay. And he could be right. Tesla, eventually, it might be $1,000 stock. Who knows? And if it is, then he'll clean up because he's got a ton of it. But it seems to me that when I was listening to that and some friends of mine, we were all talking about that. It seems like it's deja vu. This is the same thing he was saying in Trader's Journey and those psychological sections he would do for the master's workshop. It was like, okay, he's doing the same thing again. He's grabbing on. You got to listen to this guy on podcasts. He can tell you all about this thing in Tesla. And Tesla's getting in this industry group. And Tesla's got this new product. And Tesla's got this. And Tesla's got that. It just seemed to me that he wrote 10 to 20 pages of reasons why Tesla's going to go up 6 years ago. That's why I don't think he's learned anything yet. But I think go to therapy and maybe they'll figure out what's wrong. He can definitely trade because how many people can make 14? And he's a very successful portfolio manager for William O'Neill and Company. Otherwise, he wouldn't still have his job. So he knows how to trade, and he's got a great experience, incredible knowledge. He's just got a knack for it, but he just has these roadblocks.
So, Steve, I'm just wondering if Charles doesn't get a little bit of, I don't know if energy is the right word, but when he does these confessionals, he's done Trader's Journey 1 and Trader's Journey 2. And are we going to hear Trader's Journey 3 2 or 3 years from now? If he can break the cycle, then we're not going to have Trader's Journey 3 to tell us how he blew another fortune. But I think maybe it's 50-50 or whatever the odds might be of whether there is going to be new behavior or not, because maybe he's getting a little bit of validation from spending time with his therapist and coming to meetings and telling people his story. I heard him live in 2019, and there were people that were slapping him on the back and saying what a great guy he was and it was so wonderful he did his confessional thing. I'm just wondering how much ego boost he got from all the compliments he got from doing his confession at the Masters thing in late 2019.
Floyd, I think you make a great point because I remember Ed Sekoto would say that everybody gets what they want out of the market. But you think everybody wants to make money. I said, no. That's not true. Some people want action. Some people want to tell a good story. Maybe that's where Charles is, kind of like we were talking about. He likes the adulation, the attention. He talks about it himself. As a kid, he would always try to get attention from his parents. And so now maybe he's getting attention other ways, but he's still getting that attention. And that's what he craves. That's what he craves out of the market, the attention. I was there at that 2019, and we all stood up, gave him a standing ovation when he got done with his presentation. Nobody's giving me a standing ovation for anything. You got a whole crowd. They're standing up. They're clapping. That felt good. And I can understand anybody that would think that would feel good. I think with him right now, it's the attention, that kind of thing. He's not getting it from his parents, but he's getting it from us. I remember you go to these master's workshops, and whatever table Charles was sitting at, people wanted to be around that table because you knew he was going to get a good story. He's very knowledgeable. He was a great guy to hang out with because he knows so much and he's got so much experience and these incredible stories of making all this money, losing all this money, making all this money. It's like a roller coaster. I could imagine if Jesse Livermore was around right now, who wouldn't want to be at his table, getting to just listen to him tell the stories? I would love to be able to sit at Jesse Livermore's table and just say, start from the beginning. And I'm here all day long. I just want to listen. And that's how it is with Charles. I could just sit next to him and say, Charles, let it fly. I'm ready to listen.
Anybody else have any comment or question for Monica or want to share something for us?
I think that the way the therapist is presenting it to him, and he's actually repeating, you can hear the therapist's words in Charles's talk. I think she has told him that you really have to work through your childhood traumas in order for you to trade better. And that is where his mind is at. He feels that the why is so important. And once he knows the why, then he'll stop the recklessness. That is a huge leap of faith.
I don't agree with that. I think it's not so much childhood trauma as it's ego. I remember the 2019 Masters. and he popped up a picture of his 911 with the plate that said Market Wizard. I said, oh, this guy's got a really big ego. And he got the biggest ovation of the entire master's class. Like Steve said, that fuels it. Back then, he was talking about Tesla too. And it was his favorite stock. And that's really unhealthy to be married to a stock like that. Here we are years later. So I don't think anything's changed. And his therapist is now a trader, like you said. So that's not going to help, in my opinion. He has to come to terms that he can make money or he can be right. But right now, he wants to be.
Good point, George. I knew I could get a lot of great points from the audience. I'd like to hear from some other people.
It appears to me that he has compartmentalized himself into two personalities. When he's trading with clients' money, he follows everything to the book or whatever rules he has, so he doesn't blow up their account because he is accountable for that portion. When he's doing his own stuff, he's in a cult. And when you're following a cult, you just follow, you believe every damn thing. And people who usually trade in Tesla or Apple or NVDA tend to follow a cult. And you tell them anything, they will never believe that this can go down or against their belief. It's like believing in God. And then to add to that, it's his ego that I believe in something and I absolutely cannot be wrong no matter what. So even if it goes down, he comes up with some stories or makes up something saying, oh, it will come back up. It has done so much good. It is in this industry. It is this new product or whatever, even though the stock is 50% down. And an unfortunate part of all of this is he's not realizing what he's doing wrong, or you are in a recession only in the black rear view mirror. It's something like that, that you keep on doing the mistake until the bottom is hit. And then you suddenly realize that, oh, yes, I was doing a mistake all this time. I think he hasn't reached that point. He's still in the cult phase where I'll keep doing and it's going to work.
Agree.
I think his marriage had something to do with it too. He mentioned at level 4, he had been married, I think 27 years or something. And maybe he felt, I've never been married, I don't know what it is, but maybe he felt that he was a failure as a husband because the marriage went kaput. And so he said, I was a failure as a husband, but I'm not going to be a failure of a trader. That's not going to happen. So I remember when he had a new girlfriend that he was going to every table, showing her off. She's a nice, pretty girl. And I made a comment to Amy that he's showing off his new girlfriend. And I'm not here to criticize him because he's an amazing trader. I think it's very dangerous what he's doing, that he's got this enamoration with Tesla. Although I would never bet against Elon if that's one person. I would never bet against him. But to hold with the mindset of I'm never, ever selling, William O'Neill would be spinning in his grave.
I think the wild cards for whether or not there's a trader's journey 3, as you pointed out, Monica, are the codependence he has with his current therapist, and also the fact that his therapy needs to be in vivo and not on a couch. I heard him on IBD Live about a year ago. It was astounding to hear his single-minded focus. And I'm reminded, I think it was a couple of years ago when Kathy Wood's ETFs were attracting so much interest. We did a presentation about him in this meetup group. I remember thinking, wow, let's get on the bandwagon. I think it's easy for any of us to be swept along either by somebody else's success or by a chart that just looks infallible. I was also going to share reading a book from a few years ago by Morgan Housel called The Psychology of Money, and has some additional insights about this same subject. Thank you, Stuart.
Yes, everybody
I wanna
has
say
right?
something.
Go ahead.
I sense a Jekyll and Hyde personality. And one side of him wants to listen to the therapist, and the other side wants to be flamboyant and be wild. Maybe that's where I sense people calling him ego, things like that. But I don't have a feeling that he's going out winning people's votes or anything else, but I'm looking at the character as being flamboyant and wild, as opposed to following the rules. I learned how to sell through IBD and maybe following Tesla right down to the bottom with hopes. Before I started with IBD, that's the feeling I had. I had no sell rule. I had buy rules, but no sell rules. I didn't know when to get out of a stock, and I would follow them down to about 85 cents and finally have to sell just to be out of it. But I believe following the IVD rules of can swim, buying at the right time and selling at the right time. And I think you can be very successful in earning the money.
Thank you, Louis. I knew a man that followed Enron all the way down to zero, and he kept throwing more money at as it went lower. How many times do you have to get hit on the head with a ball bat before you realize it's painful?
Exactly. Now, I want to tell you one experience I had, similar to Tesla, but I was not married to Apple. I would buy and sell Apple, and that was a stock that would go up and down. You'd see it go up into the hundreds, and then it would go down lower. And I would buy it at the right time. Sometimes I would buy Apple and have to be kicked out at a certain time. I kept following the rules on that, and I did make some money with Apple at the time.
Thank you, Louis. We're just about out of time. Is there anyone else that has something they would like to share or a question for Monica? I think we have time for maybe at least one more person to, if you've been wanting to get out and say something, please don't hesitate. Unmute yourself and let's hear from you.
If I were to see what a couple of traders out here might, what their thoughts are. When the incident happened in the Middle East, that was for Saturday, the 7th, I was really thrown off because it happened on the weekend. I expected the market to be negative the whole week. To my surprise, the 9th, 10th, and 11th were all positive. It closed down on Thursday. And then Friday the 13th is when it was a down day. It tried to bump up against the 50-day moving average. I reacted emotionally, and I went to mostly cash. And some of the positions, I don't know if I did the right thing or the wrong thing. I didn't act based upon the chart. I based upon world events. So I just want to see some input from somebody out here. Did it throw you guys off too? Anybody out there?
I think it's directed at you.
Anybody out there that's in the farm here?
I think one of the main comments you made is you used the word emotion. And I think whenever you're feeling emotions, probably, this is just my opinion. If you're feeling emotions, probably the smartest thing to do is do nothing. Get the emotions in check. Look at the charts and let the charts tell you. But if there's an emotional thing going on where there's a world event or a personal thing, probably the best thing to do is do nothing, get the emotion and check the chart and let the chart tell you if you should be invested or not. I'm more than welcome anyone else to add comment to that because that's just one person's opinion. Come on now.
Go ahead, Stuart. I don't disagree at all with you, Floyd, but Anthony made the comment about I had gone to cash, and I can't remember what your emotional rationale was, but let me tell you, there's nothing wrong with going to cash until you can get it sorted out.
I think there's a huge fallacy in the industry out there where you hear brokerage firms, insurance companies, or others saying you can't time the market, you should never be in cash. And that's wrong. It's sometimes the smartest position is to be in cash. And as long as you don't freeze up and you're in cash too long, but it's good to when you need to be in cash, but then let the charts tell you when it's time to start mobilizing some of that cash.
Anthony, I was just listening to your comment. My thoughts at that particular time was consistent with how I usually approach those sort of headlines, that I've come to take the position that the market is going to do what it's going to do when it wants to, and we'll try to look for, and the press and us will try to look for something to explain it. And switching the horse and car. But I went through the same thoughts as you and ultimately did what Floyd did, was just to go by what the charts were telling me. Ultimately, you were right that the few days after that, there was a significant downtrend, but I'm not so sure that was due to world events as much as just the general market psyche.
Thank you for those comments. I think we're getting pretty close. One more thing there.
Sorry, I also want to say thank you very much, Monica. But I also wanted to comment that after I had listened to Charles for the first time, it really opened my eyes to my own foibles and allowed me to search within myself to find instances in my past that were influencing how I was handling my decisions. I know Charles had mentioned Brene Brown, and then somewhere along the line, I listened to Denise Schultz and yourself too. I've started to keep a journal close to my desk over here, and every time I have some conflicting thought or something comes to mind as to why did I do this? Why did I think this? Why did I not see this? I'll write it down and go back and explore that. And it's not only in my trading world, but it's in my life in general, how it's really allowed me to improve my relationship with my friends, my family, and my perception of the world around me. Charles has really been the person to kick that snowball off the hill.
Sure. Very good. Thank you for saying that. I'll hold up a book here, Trading in the Zone by Mark Douglas. Excellent book that talks a lot about the various psychologies of trading. And if you haven't read this one, I highly recommend it to you. And I think we're all on a journey. We can all learn from each other. We can learn from other people's experiences. I'm especially grateful, Monica, for you agreeing to talk to our group. You expanded the presentation you made to the New Jersey group that I heard you speak at. And when I contacted you and say, would you like to talk to our group, you gave me an immediate yes. And it was encouraging to hear how committed you are to this topic and the energy you put into it. So I'm very grateful and thank you.
Thank you very much for having me. I feel that I'm always getting so much out of these meetups, and I know how much work it is that you put into them, and you do it with so much love and trying to disseminate this information that has helped you with the TQQ strategy. And it's a form of paying back.
Yes.
It is.
Yes. The meeting's recorded. It takes a while to download it to Google Drive, but probably no later than Saturday. We have about 575 members or so in the Anchorage Meetup group. Monica has graciously said we could also include her slides, and no later than Saturday will be a link to the recording and a link to Monica's slides. I hope everyone has a great evening. As always, wishing the best to everyone. I wish for God's blessings to each of you. Have a nice evening, and thank you very much.
And thank you, everybody who came out, especially for those of you on the East Coast. I really appreciate your commitment. Thank you.
Yes, those are the real troopers. Goodbye.